Welcome back. American Family Radio Network Financial Issues. I'm Dan Celia. It's great to be here. We are getting to the phones, although, I don't know, something happened to the phones, Devin? I don't know. Maybe we lost our connection here on the phones, folks. Just hang in there. We'll try to get it back. We probably lost our internet feed there, Jonathan. 866-300-9298 if you want to try to queue up your call. But I wanted to get back to, I think it was Ryan. But I'll wait, see if we can get him up on the line because I had so much going on here in the break. I forgot what Ryan asked me. So we'll get him right back here. The markets are pretty much the same. Dow's up 60 or 73. Let me just take a quick look at where we are on commodities, particularly on the oil front, or maybe not, since I've lost that as well. So anyway, oil, all we know is that gas is up 12 cents a gallon. That is not a good thing, but it's up 12 cents a gallon over the last 2 weeks. I think we're going to continue to see that rise. Remember, we're switching over next month. No, in April. We're switching over to summer gasoline. When we do that, we traditionally get a rise in fuel prices and gasoline prices. Devin, do you remember what Ryan was? He asked me a very good question. Isn't that terrible? Sorry, Ryan, I'm a little brain dead here. But call back, and we'll get you on. 866-300-9298. You're listening to Financial Issues. Stocks are up higher right now. One of the things that is very interesting, I was going to save this for commentary in my second hour, and I'll do it again anyway. But one of the things that's very interesting is what is happening in the tech side. And, we were just talking with a caller about the fact that we should be doing something to incentivize corporations, right? Incentivize companies to, let's spur the economy. This, especially as we see the wean off of quantitative easing. Well, it's interesting because there was a report out this morning that's talking about the cash investments that have been made by tech companies. And it lists a whole bunch of tech companies. The highest big merger acquisition money spent for a so-called tech company would be Facebook. That was I don't know what it was. It was a lot of money. It was 19 billion maybe. But we're at $832 billion, almost $1 trillion being spent on mergers acquisition in tech companies. That's an awful lot of money. Now, here's the reason why. I mean, some would say that's a great thing. It's showing health in the economy. And I would say to all of those that are saying that they're wrong. It is not showing that. As a matter of fact, in my opinion, it's showing just the opposite of that. What it's showing is that we've got a lot of companies with a lot of cash on the sidelines and have nowhere to put it because they're not reinvesting it in the growth of their current business. In other words, they're not expanding plants. They're not seeing sales growth. They're not hiring people with that money. Now, the upside is they are using it for mergers and acquisitions, which means they believe that sometime in the future, we can expect some sort of expansion in the economy, and they are preparing for that. Well, that's a good thing as we look into the future. But we've got a market that can't seem to look more than 2 weeks ahead. So they're not really taking a good look at that. As the future. It is good for the future. It is showing some confidence in eventually we're going to get out of this mess, and they're going to be very well positioned because of these merger and acquisitions to get moving. So anyway, an interesting point, and I'll talk about that again next hour and try to just talk a little bit about what that's going to look like as we head into the future. Let me go to Jim. Jim's calling us from Alabama. Hey, Jim.
Hey, good morning, Dan.
Good morning.
Thanks for taking my call. I was just calling. I had read an article on the internet, I guess, over the weekend that was talking about the stock market and its trends and how they look, quite a bit like the stock market coming up to the point of the stock market crash during the Great Depression in 1929, and just wanted to get your thoughts on that.
Well, I'll tell you, Jim, I saw that chart. that you're talking about, that everybody's talking about, I didn't talk about it on Friday. The chart came out on Friday morning, and I toyed with the idea of dissecting it a little bit and talking about it. The reason I didn't was because I hadn't had a chance to really do a little bit of preliminary checking and analysis on the chart. I have since. It is one scary chart. There is, if you can look at the market pattern during the Depression, forget during the Depression, leading up to, the years leading up to the Depression and the years during the Depression, and then you compare that to a stock, the stock chart. I don't remember what it went back to, but I'm going to say it went back to about 2000 leading. It is identical. It is identical. It's not even, there is not one notch that is different in that chart. So it's trending. So there's some fear that, we're trending obviously in the exact same pattern that we were trending in before the Depression. Now, having said that, since you asked me what my thoughts were on that, here's the problem when we look at charts like that. When we look at charts like that, it's such a different time now. Because so some would argue that it's a very different scenario and that we can't use it at all as any kind of indication because of the size of our GDP compared to then. I think that's wrong, because what we ought to look at is the size of our debt to the GDP compared to where it was then. But we also have to look at what the government was doing. The Fed was, only 25 years old at the time. Things were a little bit different from industrial side of things and manufacturing side of things in this country. It was a very different economy. Our economy is so much more driven today on consumer spending. Like 71% of our economy is consumer spending. So it's very, very different times right now. But you can't just ignore the trend. So I'm not one for ignoring it. The Wall Street is totally ignoring it. I'm not going to do that. And it is a scary trend when you see it. But aside from the chart, I think when you look at the fundamentals of the economy, we don't need a chart to do this. And this is something I've been harping on for the last, in 2009, when I was doing interviews during the first quantitative easing. And after Lehman Brothers went down, I did 86 interviews in 2 weeks. And I said the same thing. I said, I believe that I think the future of investing is going to change forever. In 2009, after the first quantitative easing, I wrote an article. You can find it on my website somewhere, and it talked about that the quantitative easing is not going to have the same impact that it's had in previous recessions. I said it's not going to work. And if they do it again, it's not going to work. The reason I said that was because of, I don't know about you, Jim, I'm a baby boomer. Because the reason I said that was because the majority of the wealth in America is held by baby boomers. Trillions of dollars held by, baby boomers. They have been through, at best, only 3 downturns, maybe 4 in the market. So they watch their IRAs go in the tank. They watched it recover. They watched it go in the tank. They watched it recover. They watched it go in the tank. They watched it recover. They're close to retirement now. And my point was, back then, they're not jumping into the market like they were. They're not going to do it. And that has been the case. So all of those things have to factor into when we look at the charts. But I think the biggest factor is we've learned nothing from what the government did during the Depression, and we have a lot more debt to GDP than we did during the Depression. And the debt that we accumulated during the Depression, we remember after the Depression, we headed into the the peak of the Industrial Revolution. So we had an enormous amount of income being generated to the government through jobs. We don't have that now. So this is very different. That's why I said I think what we could end up in is going to make the Depression look mild compared to what we have, because I think this is going to have to be a lot longer of a problem than we had then. So the chart is very scary, but there's too many other things, too many other factors that are even, are far more scarier than that chart.
Right. Okay.
All right.
Dan.
All right, Jim.
God bless you, and appreciate your work and your ministry.
I appreciate that, Jim. Thank you. Let me go to Gerald. Gerald's calling us from Mississippi. Hey, Gerald.
Hey, Dan. I love your program. I'm an avid listener, and I wanted to make a comment and just get your perspective on it. I am a gentleman that's out of the Great Depression, right on the edge of the Great Depression. I saw our nation bent in poverty. I was in poverty myself. I see us, we rose to a great wealthy nation, one of the wealthiest in the world. Mm-hmm. And now it looks like we're going back in that direction again to poverty. And what I'm saying is, I was watching the History Channel here a few months ago, and they stated on the History Channel, they had a program, and they stated that, they commented about Fort Knox.
Yes.
Fort Knox has tons of gold, but none of it belongs to the United States. It all belongs to other countries. Mm-hmm. We have nothing to back up our monetary system, our money.
Right.
And with the government, 45 million people in the United States on government dependency, and the unemployment probably 3 times more than what they're advertising. And the only way that I see that we are surviving right now is that they're printing money every day. Every day they're printing millions of dollars of money, and then they're going up on taxes.
Right.
And but anyway, I don't see how that we're going to make it out of this in the way that they're going. And I love your program. I love you, my Christian brother, and I would just like to hear perspective from you. Thank you. God bless you.
Thank you, Gerald. I appreciate it. Gerald, you're right on the money. First of all, when you mentioned Fort Knox has never allowed an audit. We have no idea what's in there. You can go down into the vault; it might be empty. I don't know. Who knows? They appeased Congress. I'm going to say it was 1996 or 98. Both of those are it was somewhere in that time frame where they allowed an audit. There was a big thing. Okay, they're going to allow an audit. Well, what they did was they allowed a financial audit of the financial strength of Fort Knox. They didn't allow accounting or an audit of the gold. So we don't even know what's in there. I wouldn't be a bit surprised if it's empty or we got a lot more than we thought. Who knows? So that's just a wild card as far as I'm concerned. I agree with the your premise there. I mean, I think that things are very, very different than what they are made out to be. We need a commodity-based currency as long as we continue to print as what we're doing. And you were saying you said that we got to head into trouble. Look, we are headed over the cliff. Just purely from a number standpoint. I'm just an economist. I'm an economist. I'm a math guy. When you do the numbers, we have to go bankrupt. There's just no way you can avoid it from a mathematical standpoint. And we have a country that is headed for the cliff. My contention has been that we don't have to turn everything around immediately, but we've got to run the car in the ditch. We've got to stop it. And if it means running it into the ditch, we've got to do it. Now, it may take years to fix it, get it out of the ditch, up on the road, turned in the other direction. But if we don't run it into the ditch, we're going to head over the cliff. We're going to be bankrupt. We don't have a government that's willing, forget about willing to run it in the ditch. They're not willing to let up off the gas pedal. So if we stay on the current course, we're in big trouble. So there is no doubt about it. But I'm going to be confident and hopeful that some changes can be made, but I get less confident and hopeful every day. Financial Issues, I'm Dan Celia. We're going to break. We'll be right back after this.